The MELD protocol is going to revolutionize lending and borrowing as well as banking as we know it today. And as a part of this video, I want to break down all of the ins and outs as to how this protocol is going to work. What is going on, MELD Nation? Welcome back to the official Dapp Central YouTube channel. I'm your host here, Fareed, and as a part of today's video, I want to give you guys an introductory look at the MELD protocol. If it's your first time hearing about MELD, they're going to be a platform being built on Cardano, aiming to simplify lending and borrowing on the blockchain. Now, over the course of the last few months, the team has announced that they are planning on moving towards a multi-chain narrative and launching on Avalanche using their own subnet. So in the future, we can expect to see MELD or the MELD protocol running on more than one blockchain. Now, as a part of today's agenda, what I want to do is briefly break down what MELD's goals or what MELD's agenda is. And then after that, I want to talk about the current problems when it comes to Web 2 and lending and borrowing, and then exactly what MELD is doing when it comes to providing solutions in Web 3, again, leveraging crypto as well as Cardano. Now, if it's your guys' first time stopping by here on this channel, my goal here is to provide you guys in the community with the latest news, tutorials, and reviews. If you guys find any of the information that we're going to be talking about here today to be helpful, I would really appreciate it if you guys could tap that like button. If it's your first time stopping by the channel, consider subscribing. And if you guys have any questions for me, then make sure to leave those down below. Very lastly, I am running the official Dapp Central stake pool, which is going to be stake pool ticker DAPP. If you guys want to support me here on my mission to educate the broader Cardano community, then make sure to delegate or consider delegating with the stake pool. That said, let's go ahead and just jump straight into today's first topic here surrounding MELD. So jumping into a brief or a broad overview of exactly what the MELD protocol is, MELD is going to be building a DeFi banking stack, unlocking the value of your crypto assets in fiat while keeping a long position, all without creating a taxable event. The MELD protocol is aiming to be an open source, non-custodial liquidity platform for borrowing fiat against your crypto collateral and also earning yield on deposits. The MELD token, which will be the governance token for the platform, will allow for you to vote and drive the direction of the protocol through MIPS or MELD improvement proposals. And you'll also be able to stake the MELD tokens in order to earn additional yield. As I mentioned earlier, the MELD protocol has yet to launch on the mainnet and they're currently on the Cardano testnet. But as they begin to roll out, they're going to have two portions of their protocol. The first portion is going to be their C2C or their crypto to crypto platform, while the second is going to be C2F or crypto to fiat. Focusing on crypto to crypto first or C2C, this will allow for users to take their crypto, lock it up or provide it as collateral on the protocol in order to receive additional crypto. Now, the C2F will be very similar in which you'll be able to lock up crypto collateral, but instead of actually taking out a loan in crypto, you'll be able to take out loans in cash. Now, these loans will be first off in US dollars as well as euros, but I would assume that we'll get additional fiat support in the near future. Now that we better understand exactly what MELD is, what I want to do is talk about some common problems when it comes to the lending and borrowing space and exactly what MELD is doing to fix those issues. So the first thing I want to talk about when it comes to current problems in lending and borrowing is going to be access to cash from crypto. Now, if you're watching this particular video, it's probably because you believe in crypto and the future adoption of where this industry is going. So if you own a lot of crypto and you're low on cash, the only way right now to get more cash is by selling your crypto. Now, there's going to be a few downsides to this, which include the fact that you're now going to have to create a taxable event. If you're in the positive, you're going to have to pay capital gains. And then number three, you're going to lose exposure to your crypto by selling it for cash. And so how does MELD actually fix this? Well, MELD is providing a crypto collateral or a collateralized loan that you can actually take against your crypto. So what this means is that you can still keep your crypto, you can put it up as collateral in a smart contract, and then from there you can borrow crypto or fiat. So using a simple example here, I can take my crypto I can put it up in a smart contract and I can take out cash as a part of that loan. Now I can then take that cash, right, without creating a taxable event or having to pay any capital gains, and actually use that for my everyday chores. For example, paying my light bill, paying my rent, etc. Now, once I'm done with that, I can bring that loan back and I can pay back that loan that I took out originally, therefore unlocking my original collateral. And so in this particular example, I don't have to generate a taxable event. I don't have to pay for any capital gains, and I still keep my exposure to my crypto, again, because I'm long on crypto and I believe in the future of this industry. One last point that I want to add here about this particular topic is that the interest that you pay on the loan before you pay it back will also be tax deductible in most countries at the end of the year. So a lot of benefits here when it comes to this particular option, and hopefully you guys can see why it makes more sense to take out a collateralized loan as opposed to selling your crypto for fiat. Now, the second pain point that I want to touch on when it comes to regular crypto to fiat loans or regular DeFi platforms is going to be a lack of trust and transparency. A lot of the platforms that are currently operating right now actually are centralized. And so what this means is that there's going to be a centralized party that has access to your crypto keys, as well as to dictate what actually happens on that platform. And so, for example, take Celsius, which was a crypto lending and borrowing platform, very similar to what MELD is doing. However, they were operating as a centralized entity. And so users were basically depositing all of their assets into wallets basically held and managed directly by the Celsius team, and they were able to do with that as they wished. There were no smart contracts in place, and there was no governance surrounding who actually could control the funds. And again, the users on this platform had to turn over their keys or give up custody of their assets. Now, MELD, on the other hand, will be tackling this problem using blockchain technology. As I mentioned before, MELD is going to be building on Cardano, and they've got plans to move out to the Avalanche subnet. Now, as they gain more adoption, they do plan on building on additional networks. Now, because they're building on top of blockchains, they're going to be able to take advantage of all the different features or benefits that a blockchain brings. Now, if you're not familiar with what a blockchain is, it's basically going to be a distributed ledger. The first key benefit of a blockchain is the fact that it's going to be immutable. This means that every transaction that happens on the blockchain is counted as final. There is no way to go back in history and edit or change something that has taken place. Number two is going to be transparency. Everything that happens on the blockchain is distributed amongst the nodes that keep the network running. And so as a result of that, every transaction is visible to the public. And so transactions being made by MELD, transactions made by myself or any other platform user on the platform will be visible to the entire public. Number three, when it comes to distributed ledgers and blockchains, this is going to be run using smart contracts. So on a centralized exchange, you've got people who are emotional, right? Making decisions when it comes to the actual funds. On MELD, however, they're going to be using a smart contract, which is basically a piece of code that has a specific function, right? Whether it's to add liquidity to the protocol or withdraw assets from a user's account. And that's going to be the only function that that particular smart contract has. So MELD is going to be made up of multiple smart contracts that perform different actions on the protocol for users using the platform. And so again, that's going to be the third feature. And then the last key feature here that I want to mention is going to be the fact that you get to keep your crypto keys. So on platforms like Celsius, you basically gave custody to Celsius to manage your assets, whereas on MELD, you're still going to get to keep access to the wallets that you're using to provide collateral or liquidity to the protocol. So once you pay back your loans, you still have the keys to claim back your collateral at any time. And there's never anybody else who's in charge or in ownership of your assets. In summary, when it comes to the particular topic of lack of trust and transparency, there's going to be two types of platforms. So number one is going to be a centralized platform like we saw with Celsius, which keeps track of all your assets and makes decisions for you. And number two is going to be a decentralized platform like MELD, where you get to take advantage of the blockchain's immutability, transparency, custody factors where you keep your own keys, as well as the ability to use smart contracts. Now, the third key pain point that I want to touch on here as a part of today's video is going to be surrounding background checks. If you watching this video have ever taken out a loan at a bank or a Web2 platform, then you more than anybody would know that this process is extremely intrusive as well as expensive. And so you have to divulge a lot of information to the banks or whatever platform is loaning you the money. And then you may, in some cases, actually have to pay for that background check. And so how is MELD going to be different here? Well, using MELD, there's going to be no credit checks and no background checks. You heard me right. MELD does not care about what you look like, how old you are, or where you live in order to use the platform. And so as a part of this, they're able to do this using collateralized assets. And so what this means is that you can only take out a loan for a certain percentage of the total amount that you're putting up as collateral. And so as an example, if I put up $1,000 worth of crypto as collateral, I can take a loan of up to about 50% of that $1,000 amount, which in this case will be $500 against the MELD platform. And so again, you can take out a crypto to crypto loan or a crypto to fiat loan, but it can only be up to 50% of the total value of the collateral. Again, this makes sure that the MELD platform will never be in the negatives, while also providing the users the ability to not have to undergo a intrusive background check or pay for a credit score check. Now that we better understand some of the current issues within the traditional lending and borrowing space, as well as the solutions that the MELD protocol is bringing to Cardano and crypto as a whole, I want to jump over into their official website, which is going to be meld.com, and take a look at some additional key benefits and summarize how you can take advantage of your crypto holdings. And so number one, it states you can stay long and get cash. Leverage your crypto holdings for the cash and credit that you need. MELD lets you easily borrow fiat against your crypto holdings without having to sell your crypto assets. This goes back to the very first problem that I mentioned here, which was the access to cash from crypto. You no longer have to actually sell your crypto, get out of your position, and create a taxable event in order to gain access to fiat. You can now hold on to that, collateralize it, and once it's collateralized, you can then get your fiat, use it within the regular world, come back, pay it back, and unlock your crypto collateral. Again, you don't have to generate a tax event here. You don't have to pay for any tax gains. And third, you also can actually write off the interest that you pay off as a part of that loan. So that is going to be the first key point there in summary of how you can benefit from MELD. Now, the second point that it mentions here is that you can now get a loan and keep your crypto keys. Use your crypto holdings as collateral to secure low interest loans in fiat without losing your private keys. With MELD, you can leverage your cryptocurrency to borrow the cash that you need today while still maintaining full control of your crypto portfolio for future value. Now, I want to be clear here in the fact that MELD will be using smart contracts. So if I were to take out a loan, right, I would actually have to put up my collateral, which would be deducted from my wallet and put up any smart contract for holding. Now, the job of that smart contract is to basically only execute when certain conditions are met. And in this example, it would execute and give me my collateral back once I pay the loan back. So MELD does not actually hold any of the funds. It's all going to be done through a smart contract. And that's why it's extremely important to make sure that platforms that are auditing smart contracts and as well as the builders building the smart contracts are doing it in a secure way to make sure that there's no loopholes or features that can be exploited once the platform goes live, because this is what's going to be managing all of the liquidity. Now, the portion here surrounding keeping your own crypto keys alludes to the fact that on MELD, no one else is going to have the ability to unlock or reclaim that collateral from the smart contract other than you. Again, because the smart contract is written in a specific way, it's only going to be able to be unlocked, or the funds will only be able to be returned to the original wallet that deposited the initial collateral. So because you own the wallet that is making the initial deposit, as long as you keep those keys private and you keep those keys to yourself, once you're ready to pay back your loan, only you can actually go ahead and reclaim that loan. There's not going to be any other way for somebody else to come back and take that collateral or add or just mess around with your particular smart contract once you've gone ahead and initiated it yourself. Now, there's a third portion here talking about taking out loans. So it reads here, using the MELD app, you can choose how much cash you'd like to borrow, and you can add your crypto as collateral, which has to be about 2 times the amount that you'd like to borrow, and you can lock it into a MELD smart contract. So we've already touched on the smart contract portion of things, but as I mentioned before, you can only take out about half of what you put in. So if you put in crypto worth $1,000, you can take out a loan in crypto or fiat worth $500. Now, one thing I want to talk about here is going to be liquidation risks. all loans on the MELD protocol will be subject to liquidations. What a liquidation is basically the process where the crypto collateral that you put up in the smart contract, where it begins to lose value, right? To the point where MELD has to basically take or keep that collateral in order to ensure that they don't go in the negative. And so as a very simple example, let's say that I have $1,000 worth of crypto that I want to use on the MELD protocol that I put up as collateral. At that point, I can take up to about 50% of the collateral's value as a fiat or crypto loan. And so let's say that I take out $500 worth of fiat as a result of that $1,000 worth of collateral. At that point, I have a 50% LTV or loan to value ratio. This means that my loan is 50% of the value of the collateral. Now, let's say that the value of my collateral drops for whatever reason, and it's now worth $800. At that point, if I still have the $500 loaned out, my LTV is now going to rise to 62.5%. At this point, I'm now getting closer, right, to the point where the actual value of the loan is getting to match the value of the collateral. MELD does not want this, right? That's how they're able to basically make sure that this platform doesn't require any credit checks or any background checks or anything like that, right? Is because everything is over collateralized. So the closer you get to not being collateralized, the more risk is actually being put on the MELD protocol. And in order to fix this, there's going to be two options. Option number one is to add additional liquidity in the collateral, right? So you can basically add additional collateral, therefore raising the LTV. Or option number two, you can actually go back and pay some of the actual loan. So if I want to, I can either add an additional $200, bringing my LTV back up or my collateral ratio back up to $1,000, or I can return $100 of the cash, right? Therefore reducing the value that I've taken out. So in this example, if I choose to just return some of the loan and I return $100, right? I have a collateral value of $800 now, again, after it's fallen, and I've got a fiat loan of $400. So we're now back to an LTV of 50%. I hope you guys can understand that and that it makes sense. Now, one last thing to keep in mind here when it comes to the LTV ratio, anytime that your LTV value is going to be between 50 and 65%, you will be notified by the MELD protocol to take one of two actions. Number one is to go ahead and pay back a portion of the loan, or number two, go ahead and actually add additional collateral in order to reduce your LTV value. Now, in the event that your LTV value passes 85%, the MELD platform will automatically trigger a liquidation. This means that the MELD protocol will be taking your crypto collateral and actually trading it in for the US dollar or the euro. Now, they're also going to be adding a 5% fee that the protocol will actually keep. And then whatever value is remaining in fiat will be returned back over to you. And at that point, you don't have to actually pay back the loan. And so using the same exact example as we took a look at earlier, let's say that we have a $1,000 collateral position and we're taking out a $500 fiat loan against that. Initially, that would be a 50% LTV. Now, let's say that the value of the collateral drops down to about $600. That will bring the LTV to about 85%. And at that point, the MELD protocol would execute a liquidation. Now, what this means is that the MELD protocol will sell the $600 worth of collateral for the dollar or the euro. For this example, let's just say that they're using the dollar. So they're going to sell and actually keep $500, which was the amount that they initially had lent out to the borrower. This leaves a $100 remainder, and of that $100, they're going to be taking a 5% fee, therefore leaving $95 to be returned back over to the borrower. Now, because the protocol has already recouped its funds, which was the initial $500 that was loaned out to the borrower will be receiving $95 and will not have to pay back the initial fiat that they borrowed. And so that is how the liquidation process will work. I hope that makes sense. Jumping back over to the official MELD website, I want to touch on two more points here before we close out today's video. So it states here, using MELD, you can earn yield on your crypto. Your crypto collateral is added to MELD's liquidity pools to generate yield and work for you for the entire lifespan of the loan. Again, using my simple $1,000 example, let's say I borrow $500 worth of fiat against $1,000 worth of crypto. well, that crypto can continue to earn me passive income even though I'm taking a loan out against it. And so what MELD is going to do is take that $1,000 worth of collateral, put that in their liquidity pool. And if you're using the MELD protocol, right, you're going to be generating fees, which will be going back to anybody who has a portion or ownership within that liquidity pool. So that's going to be another way to provide usefulness to members using the MELD protocol. And similarly, for example, like a token like Cardano, if I'm putting that up as collateral, that can be staked in the meantime while I'm using the fiat in order to earn passive income from Cardano native staking. So another way for MELD to bring utility and make sure that the money is continuing to work for you, even though you're taking out a loan against it. Now, the last item I want to touch on here is going to be surrounding paying back your loans. So it states here you can make monthly payments to pay back your interest and your principal on your loan. Once the loan is paid off, your collateral is going to be released back over to you. Again, you guys probably understand the MELD protocol a little bit better than I do at this point, but you can go ahead and put up your collateral. That then is opening up the door for you to take out a crypto or a fiat loan that you can use in the real world. Once you're done using that loan, you pay it back. And once you pay it back, as long as you have the crypto keys and you have the correct wallet to go ahead and reclaim that collateral, you can go ahead and claim that back. Now, if you've made it this far into today's video, I've got a nice special treat here for you guys in closing. So what I want to do is briefly touch on the Genius loan and exactly how it's going to work. This is going to be a one-of-a-kind feature being offered by MELD, where a borrower only has to pay on the interest of a loan instead of paying any of the principal. Now, the way that MELD is able to do this is by leveraging the yield being generated by their collateral and actually using that yield to pay back the principal on the borrowed amount. And so again, this is going to be a one-of-a-kind feature here that allows for the borrower to only pay back the interest on the amount that they borrowed and not have to worry about any of the principal. That will get paid over time as the amount that they've put up as collateral is generating yield, and that yield is being used to pay back their principal on the amount that they've loaned. And so as a quick example here, it states, based on our models, right, it will take anywhere between 3 and 6 years to repay a $100,000 loan depending on market conditions. Now, the development for the Genius loan right now is undergoing, and again, we're going to be able to get our hands on this on the testnet very, very soon. That is going to bring us to a close here for today's update here on MELD. I hope you guys are able to find this to be extremely helpful. If you did, I would really appreciate it if you guys could tap that like button. If it's your first time stopping by the channel, consider subscribing. And if you have any questions for me surrounding the MELD protocol or Cardano, then make sure to leave a comment down below. That's it. And as always, I will see you guys in the next video.